Welcome back, Fear-Free Passive Investing listeners. My name is Lucas Miller, host of this show, and I'm really excited that you're here. Today's Friday, so we're going to do our Friday 5 show, and I know we have a lot of new listeners, so for those who haven't heard one of our past episodes, Friday 5 is where we talk for 5 minutes, give or take, I always say. Don't hold me to that. So for 5 minutes, give or take, about things impacting the commercial real estate investing sector, the world that we live in, our investing. Usually there's a multifamily slant, but that's just because that's what I have experience with. So we're going to start today's show off with something that's been kind of on the top of my head for a while now, and I thought it just makes sense to do a video about it because it's something that's really going to impact returns moving forward. And that's really talking about insurance. So, and let's back up a little bit. Obviously, with every property that people buy, whether it's commercial or residential, you're going to get insurance. If something bad happens to your building, you want to put in an insurance claim and you don't want to be on the hook for the entire repairs. And so insurance companies insure large multifamily buildings similar to the way that residential houses are insured. But it's critical for every property. Now we're just talking about basic property insurance, general liability, stuff like that. We're not talking about flood insurance. That's a whole nother thing. But right now, we're seeing that insurance is really kind of tanking some of our deals, not deals that we've bought, but deals that we're underwriting and hoping to make offers on. And over the past several years, insurance has gone up significantly. And while it hurt, it was manageable because rents were going up too. But on average, like renewals right now are climbing on average like 30% right now. That's unsustainable. Imagine a line item on your bill just keeps going up 30% every year, 20%, 30%. That's not taxes, that's just insurance. So at a time right now when rents are higher than they've ever been before, it's not possible just to increase rents to pay for that and to offset that. I was reading a Wall Street Journal article and it was a quote, insurance premiums for apartment buildings have been rising faster for the rest of rising faster for multifamily than for the rest of commercial real estate, further squeezing landlords' profits during a challenging period to collect rent. Talking about COVID. The best explanation we've gotten for this insurance issue is basically COVID. I'm not really sure how it translates necessarily, but I guess there's a greater risk of people cashing in on insurance claims to capture rent if they have that in the policy, or just maybe taking advantage of roof claims while they have downtime. I don't really know what it is. But before that, it was like the flooding that was in Texas a couple of years ago that was driving up rates across the nation. But it's just things that continually compound like that, and they just keep going up. So in my mind, we're kind of at a tipping point with insurance. Obviously, we can't have something in a budget line item that continues to go up unsustainably. Like, we can't even underwrite things right now because we don't know where things are going to be at. I don't really know what the answer is, but the next step is obviously sellers are going to start to take pricing hits on their buildings as they're selling them because, we have a set parameters that we have to provide investor returns, and we have to account for this crazy insurance. So that's got to come out of somebody's pocket right now, and it's not going to be coming out of ours. So they have to take a pricing hit, and I'm not sure that sellers necessarily realize that quite yet. I know it's probably going to happen soon, but we can't continue to pay market pricing while insurance is going up 20 to 70% somewhere, depending on what it is. So just a little something as a passive investor you might want to keep an eye on. If you're looking at a deal to invest in, ask the sponsor how they're underwriting their insurance quotes, if they have an actual hard quote from a broker or a insurance provider, or if they're just going off of traditional pro forma. Or if they're just going off of what they normally do. All of those things can really get you into trouble without a firm quote in hand. So make sure you ask that of your sponsors. So anyway, I hope this has been helpful. I think we're actually going to be less than 5 minutes this week, so that's awesome. But we're really excited to have this channel growing so much lately. It's really neat to watch. So if you haven't yet, go ahead and subscribe to us on YouTube, and make sure you are actually listening to the podcast. That helps, but also sharing it too. If you know someone that wants to create passive wealth for themselves or their families, it'd be really helpful to me and to them if you would share this show with them, tell them to subscribe, send them a few videos, or send them the podcast. And if you haven't yet, I'd love if you left a review too. Just scroll down on Apple Podcasts. At the bottom, it says write a review. If you could just do that, I would love it, and I really appreciate it. So with that, thanks everyone. I can't wait to talk to you next week. Hope you have a wonderful weekend. Bye.